I learned a fun fact today that the reason AT&T's ticker is the letter T is for telephone. And I don't know why I didn't make that connection beforehand, but I thought it was interesting. Nevertheless, walk us through the cash picture for AT&T. Why is this important?
So it's important because the free cash flow at AT&T funds the dividend. And so the estimate for free cash flow for the quarter was $3 billion. The company reported $1 billion. A lot of that had to do with elevated capital spending, but it rekindled all those fears about AT&T doing another dividend cut. And dividends are everything to income stocks like AT&T and some of the other telecoms.
Well, let's talk a little bit before we get into the dividend piece of the equation. I want to talk about what AT&T is actually trying to do. They're trying to build out a much bigger broadband service. Are they succeeding?
Yeah, they're actually doing a very good job. So they're building fiber networks within their territory, and they're actually starting to move outside their home territory. So I like to say the real fiber bulls, and I think they're on the right path there. I mean, data ultimately needs to find its way back to a fiber network, particularly in a 5G world. So I think they're on the right path with that, and they're making good progress there.
All right, let's bring it back to the dividend story then. If they are making good progress, how long will it take then to increase that dividend, given that a lot of folks choose to be exposed to the telecom sector for that juicy yield?
Well, they don't really provide specific guidance on dividend growth. I think what will happen beyond this year is they're really, let me wind it back. I think they're really hitting a peak year in terms of their 5G spending this year, and that 5G spending, they have to share it with the fiber build. So it really is an elevated number for them. It's running around 24 billion, which is a big number if you look back at their history. And so I think we're going to come off those levels pretty significantly starting next year, and that'll take a lot of pressure off free cash flow and give them much more freedom in terms of making capital allocation decisions, whether it's share buybacks or dividends.
And let's then add in 30 seconds here, the broadband subscription that you were just outlining. 23,000 broadband users lost in the first quarter. How did they get them back?
Well, part of those losses are what we call legacy data subscribers. They're on those low-speed lines. If you ever heard the term DSL, they're very low-speed links. But there's a lot of them out there. And I think over time, those subscribers are upgrading either with AT&T or with other carriers and letting go of those older legacy lines. So if you strip those out and look at the core fiber business and the broadband net additions there, they're doing quite well. But when you mix it in with the losses on those older data services, you come to a net loss. But to me, that's not concerning. My eyes are on how they're doing in the fiber business, and they're doing just fine.